Time to review earnings for Apple, a company that has great products, but the people who use them, I don't know. Let's see, I had an iPod video up until mid 2017, and Apple users would see that and just heckle me and throw stuff at me,
saying, oh, you got a dino pod.
And I'm thinking, oh, you're so clever mixing dinosaurs with iPods because they're old. But they kept saying it. Nowadays it's a little better, but kind of worse too, because now they just try to silently stun on you. You ever talk to a guy with AirPods in? He will tilt his head just like this, talking to you like this. And you ask him, hey man, is there something wrong with his neck? And he's like,
no man, my neck is great, much better than your neck.
Because really all he's trying to do is tilt in a certain angle so you could see that he has AirPods. Silent stunting. But alright, let's move on to actually talk about Apple's earnings with our favorite analyst, Ben Thompson at Stratechery. So Apple said on Tuesday that profits were flat and revenues were down in its most recent quarter, indicating a difficult road ahead for a company that 5 months ago became the first American firm to be valued above $1 trillion. The disappointing financial performance had been expected since January 2nd, when Apple, for the first time in 16 years, revised its forecast for the quarter because of an economic slowdown in China and diminishing demand for new iPhones. And if you remember in our last video, we talked about this. And by the way, this is all from the New York Times. Now, after years of expansion and record-setting profits, Apple appears to be entering a period of vulnerability. While it has had some success with new products like the Apple Watch, the company has not found another product with the global impact of the iPhone, which was introduced more than a decade ago. So Apple is also uniquely vulnerable to slowing consumer demand in China, as well as potential tariffs on Chinese-made products. Again, in the last video, we talked about how the Chinese people don't really care as much about Apple's iPhones anymore. They aren't that special, because the Chinese are only really looking at the hardware, which isn't as differentiated as it used to be. Everyone makes phones just like the iPhone, so the Chinese are fine going with a different brand. Whereas people in the US, they are more attached to the software of Apple. They need their iMessage and their Apple Music, so it's a much more locked-in user base compared to the Chinese. And as Ben explains here again, the slowdown is driven by macroeconomic conditions and the competitive challenges unique to China. So here he has a chart of Apple's revenue growth by region, and you can see how bad China is compared to the rest of the world. But the rest of the world in general isn't doing that amazing. You see, revenues are going down. So Ben says there are a few interesting takeaways here. First, you can really see how greater Chinese growth is tied to the release of original industrial designs in a way that is meaningfully different from other geographies. See, the iPhone X, that was pretty cool. They liked that. iPhone 7, not so much. iPhone XS, also no. Not differentiated enough. It's all dependent on the hardware. Second, while China was the worst performing this cycle, Apple really didn't do well anywhere. Sure, the US and the rest of Asia grew slightly, but not by much, and off a far weaker comparison than the 2016 slowdown. So really, revenue growth is slowing everywhere, not just China. And third, he says it's really interesting how Europe almost perfectly mirrors Apple's overall growth rate. And he says the last point is probably a coincidence, but it makes sense, because as I said before, the US and Europe too, they are the most attached to Apple's ecosystem, so with all the software, not only just the hardware. Where the least attached, China, is on the other end of the spectrum. But the overall story, as we've been tracking it, is that iPhone sales continue to be weak everywhere. And that's why in this earnings report, Apple has swung even further into the services narrative. So if you remember, Apple announced that they would no longer report unit sales. And the point of this is that they're trying to get investors not to focus on iPhone growth like they've been doing for so many years, but instead focus on where the company is going, which is in its services, which I also made a video about that. If you haven't seen, I'll link to it above. So Ben agrees with this shift because he thinks that more insight into Apple's main growth driver is clearly appropriate. What he said that's missing though is the equivalent of unit sales for services, specifically the number of active customers Apple has, and the associated revenue per user. This is the exact same metric that matters to social media companies. And to the extent that Apple's growth is derived from continually monetizing its existing user base over time, it makes sense to have that metric here too. So Apple did report that they had 1.4 billion devices and 900 million iPhones. So that doesn't exactly tell you how many users, but it's a step in the right direction. So you can't really calculate the average revenue per user with this information, but Ben was able to show the average annual amount of services revenue per Apple device, which is $28 per year, and the average services revenue per iPhone, which is $44 per year. And here he compares that average revenue per device across a few companies. So Apple is at 44, and these are all estimates by the way. Facebook is at 104, and Google is at 187. And the reason I'm only highlighting the US and Canada numbers is because they're the closest match to Apple. As Ben says here, Google and Facebook's US and Canada numbers are a better proxy for Apple's user base, which is by definition relatively well off. Yeah, bragging about your AirPods, of course you gotta be well off. Now it's not a perfect comparison because of course ad advertising is very different between Google, Facebook, and Apple. And by that, I mean the way that they make money. But he says this is still good news for Apple shareholders because it suggests that Apple has plenty of room to grow within its existing user base without needing to reach an audience of the size of Google or Facebook, since much of that audience doesn't monetize well. So Apple is only pulling $44 per device, but if you look at the potential, as you can see in these other numbers, they can really raise that, which is again why the company is focusing on services. So Ben reiterates here that Apple is making it clear that the number that matters is average revenue per installed device. So if Apple is measuring that and focusing on that, then that means they are truly a services company. So okay, that's how we're looking at the latest earnings, but how is the market looking at it? And so far, the market looks happy. Apple's stock price jumped over 7% after that announcement and continues to trend higher. So way more important than any analysis that you or I do on the earnings is always how the market reacts to it. Now, in some cases, when you're analyzing a company, you might think it's a great earnings report, but the stock gets dumped. And that means one of two things. Either your analysis is wrong or your analysis is right and the market is just not agreeing with you. So you might have a potential for value there. But I wouldn't suggest investing right away because that stock could drop for a long period of time. Now, if you thought our earnings report was bad, but it looks like the stock shot up anyway, then maybe your analysis is off or maybe the stock is becoming overvalued. Now, I personally don't play that value game. I'm a momentum guy. So when I look at earnings and the stock shoots up, that's a good sign because who cares what I think? I only care about what the market thinks. If the money is moving into the stock, that's where I want to be. So establishing a position anywhere at these levels might be a good idea because Apple could really keep going from here. But there's also a significant chance that it could just move sideways and chop around. And that's kind of the action that we talked about in the last video. So what you do is really dependent on your own strategy. But let me know down in the comments what you think about Apple's move into services. Do you think they're going to make the transition successfully? Do you think they should just stick to making new hardware that everyone wants because that's what's made them successful so far? Let me know down below. And if you haven't already, make sure you subscribe to our trading FOMO guide. It will show you how to avoid FOMO so you don't screw up your trades. There's a link in the description and in this video. It's free to download, definitely check it out. And also don't forget to subscribe to this channel and hit that bell for an email notification when new videos come out. We release about 3 a week, all business and market related. So subscribe and I'll see you in the next video. Bye.